right, good morning, everyone. On behalf of NAAHL and the Center for Affordable Housing Lending, welcome to our annual Policy and Practice Conference. One of the many reasons why we need an immediate end to the federal government shutdown is its disruption in travel, so we're glad to see so many of you made it in okay. Unfortunately, Brandy McHale, her travels were disrupted and she sends her deepest regrets, but thankfully we are still gonna have Rob from Citi just do a quick greeting as our lead sponsor of the event.
Thanks, Sarah, and good morning to everyone. I'm Rob Runyon. I lead third-party engagement for Citi here in our Washington office. And that means I get to work with organizations like NAAHL and a lot of the member organizations on advancing our policy interests here and around the country. So maybe I can work with your organization. Find me in the break room. Kylie Patterson is also here from our team. So we'd be happy to talk with you about how we can partner. I know I want to pass along Brandy's regrets for not being able to join us today. She really looks forward to this event and to her work with NAAHL. And I can't replace her and speak for her, but I know she wanted to reflect on how she sat on the stage a year ago and talked about we knew change was ahead and challenge was ahead, but that may have been an understatement. So, but here we are, and we're really happy to be back in this room with all of you. Citi is proud to have been the top affordable housing finance lender for 15 years running. We have some amazing banners that are situated across from the food in the hall that depicts where all those projects units have been created or preserved over those 15 years. And for a bank that has branches in just 6 major markets, it's always a pleasure for us to see our impact broadened out to those communities all over the map. And I know Brandy also wanted to speak to the challenge ahead, and I know we probably won't all agree on how we got here or the way forward, but I think the debate we have here on housing policy and beyond is both healthy and critical. And I know we have speakers that are much more capable than I am to lead us there. So I want to turn it back to Sarah, but on behalf of Citi, welcome you all to a great day. Look forward to talking with you more.
Thanks, Rob, and thank you, Citi, again. So as I was preparing for today, my main thought was similarly, wow, what a difference a year makes. I feel like a different person. This time last year, we were preparing for what we knew would be a new chapter in American politics, but let's be honest, I think the pace of policy developments has really tested us. But what I said a year ago, I know to be true even more today than I did then, and that's that NAAHL, our members, our partners, and really this entire sector, we were made for this moment. In this room are leading policy experts and practitioners who are carrying out our mission to expand economic opportunity through investments in affordable housing and community development. In this room are organizations that together lend and invest more than $75 billion in housing and community development each year nationwide. NAAHL's member network uniquely represents the public, private, and nonprofit partnerships that make that possible, to put it simpler, that help Americans have a place to call home. And we found in the past 9 months that because of the work our members do, by being that national alliance of leading investors and lenders, we are uniquely positioned to fiercely defend, represent, and advance affordable housing solutions. So as we continue our work together, I'd like to share a few of our principles in how we approach the work. First, housing affordability and supply is a top 3 issue for voters across the country. What do we know from some of the latest polling? There's no question that Americans think housing is too expensive. 79% say that housing costs are too high or way too high, and 62% say it's become harder to find housing they can afford over the past 3 years. Nearly half of renters and 1/3 of homeowners reported difficulty paying their rent or mortgage over the past year, and Americans are also really uncertain about the future, with 82% responding they think it will be harder for young people to buy a house when they grow up. But it doesn't have to be this way, and Americans are ready for federal action. In the lead up to the 2024 presidential election, a majority of respondents across party lines identified legislation to boost supply and address costs as an important priority. And as we saw reaffirmed in yesterday's elections, this is about cost of living for renters and for homeowners in cities and in rural communities. And we will be beating this drum to continue to elevate housing as a top issue, one that cannot be neglected by current or aspiring elected officials. Which brings me to point 2, that we are fiercely disciplined in our approach, that housing is a nonpartisan priority, and we will advance solutions with bipartisan champions. The chaos of Washington is not going to end anytime soon, but housing is a place where we can and are building more and more common ground and can drive home solutions through reconciliation bills or bipartisan housing packages. Lastly, while there is a lot to defend, notably the necessity of a functioning, strong public partner in the federal government, we need to be bold and think beyond the status quo at the same time. Americans need a housing supply boom like we haven't seen for decades, and it's going to demand that the public, private, and nonprofit sectors find new ways to innovate and unlock resources. But what I challenge us all to do as we think about what comes next is that bold may not mean something wholly new, certainly not policies that add more costs and steps to development, but bold could mean efficiency, bold could mean simplifying our housing finance models to scale impact, bold could mean a 3-source capital stack. Maybe it's because we're all here together. Maybe it's because we have a really exciting agenda for you today. Maybe it's because I've had several cups of coffee already. But what I hope to extend to you today is that underneath a lot of the chaos and disruption, we have many reasons to feel optimistic, energized, and even curious of what could come next. From huge wins for the low-income housing tax credit to being very close to hopefully passing a bipartisan housing package, the work is paying off. That's thanks to decades of advocacy work at the federal, state, and local level, the development of sophisticated business models and practices, and the forging of meaningful community ties and cross-sector partnerships across the country. All of that has brought us to this moment where we are having wins, and I see more to come. Every week, we receive more and more outreach for new ideas from new potential champions on both sides of the aisle, and we will keep approaching the work to advance our mission by carrying on that NAAHL tradition, that we are honest brokers, that we're here to be strategic, and as the leading investors and lenders in affordable housing, we're here to drive scalable, innovative solutions to unlock housing supply and economic opportunity and prosperity for all. So thank you to all of our generous sponsors, our members, our leadership, the NAAHL team, and to each of you for being with us today. And before I turn it over to our keynote, we're gonna have several videos from congressional champions that will play throughout the day. To start, I'm pleased to share this message from Senator Crapo, who of course is one of the bipartisan Senate CDFI caucus leads, and in his role as Senate Finance Committee Chair, oversaw the enactment of the expansion and strengthening of the low-income housing tax credit, among other community development wins.
Hi, I'm U.S. Senator Mike Crapo. Thank you for inviting me to share a few remarks with you today. For far too many Americans, the dream of home ownership has been beyond reach as the gap between the demand for affordable homes and the supply has widened. Fortunately, Congress and the administration are hard at work to advance sound housing policies that will help make the American dream more attainable. The One Big Beautiful Bill Act that I helped author as chairman of the U.S. Senate Finance Committee, and which President Trump signed into law on July 4, included several provisions to help achieve this dream, such as making permanent the Opportunity Zone program, the New Markets Tax Credit, and the Enhanced Low-Income Housing Tax Credit, or LIHTC. It also included a provision allowing Americans to keep more of their hard-earned money. The Senate Banking, Housing, and Urban Affairs Committee, of which I'm a senior member, also recently unanimously passed the Renewing Opportunity in the American Dream, or Road to Housing Act. This comprehensive bipartisan legislative package would reduce regulatory barriers to new and affordable housing. I look forward to the full enactment of this legislation. And finally, I'm sure you all agree Community Development Financial Institutions, or CDFIs, play a critical, important role in expanding our nation's housing supply. Not only are CDFIs key drivers of development and preservation of affordable housing, but they also use tools like the Capital Magnet Fund to scale housing investments to build new housing and bring down housing costs. Capital Magnet Fund dollars help meet LIHTC's full potential in addressing our nation's housing shortage and improving housing affordability for everyday Americans. The value of CDFIs and the CDFI Fund cannot be overstated. That's why I recently led more than 100 Republican colleagues in both the Senate and the U.S. House of Representatives, reaffirming support for the CDFI Fund and urging the administration to maintain the fund's statutory obligations to fulfill the administration's long-term economic and housing goals. Homes are the foundation for economic success, family stability, and community cohesiveness. I will continue working with my colleagues and the administration to use every tool at our disposal to make the dream of homeownership more attainable. Thank you again, and enjoy the rest of your conference.
All right. So it's my honor to introduce our esteemed keynote speaker, the Honorable Rodney Hood. Mr. Hood has served as the leader of not one, but two financial regulators. First, as a member and then chairman of the National Credit Union Administration, and most recently as the acting comptroller of the currency, a role he held until July this year. Throughout his career, Mr. Hood has been dedicated to supporting financial inclusion. He has served as a CRA manager, directed community development lending, and served as a corporate responsibility manager, leading partnerships with organizations that helped expand economic opportunity. And as a regulator, Mr. Hood helped drive efforts to promote financial stability and wealth building for low-income Americans nationwide. That includes his work on the board of NeighborWorks America, where he supported the organization's work to expand affordable, sustainable housing opportunities. Mr. Hood now serves on the boards of Zest AI and the Federal Home Loan Bank of Atlanta. After sharing opening remarks, Mr. Hood will be joined for this conversation with Nikki Holsopel, who serves as the head of community reinvestment and community partnerships at JPMorgan Chase and is one of our longtime board members. So thank you for joining us today, and Mr. Hood, for your dedication to advancing economic opportunity for all Americans. Without further ado, please join me in welcoming Rodney Hood and then Nikki Holsopel for a conversation.
Wow. Housing is more than bricks and mortar. It is the foundation of opportunity, stability, and dignity. Good morning, everyone. I am certainly thrilled to join you all today, and what an honor it is to be here as your opening keynote speaker for the 2025 National Association of Affordable Housing Lenders Policy Summit here in DC. I certainly want to begin by recognizing Sarah Brundage for her outstanding leadership as president and CEO. And I certainly, yes, here. Sarah, what we're doing is we are applauding you for your vision and your unwavering commitment to expanding affordable housing and community development. Sarah, it's under your leadership, I'm proud to say, that NAAHL, and as someone who has been a policymaker here in DC and a banker, it is because of NAAHL's leadership that this organization is indeed and undeniably one of the most credible and respected organizations here in town, a voice for both practical policy and principled progress. This year, as you celebrate 35 years of impact, we all indeed pause to applaud NAAHL's extraordinary success as a champion of the Community Reinvestment Act, a leader in bipartisan housing coalitions, and a trusted partner to regulators and legislators alike. As the opening speaker of today's session, I certainly hope that I can set the tone for a day devoted to substance, collaboration, and forward-thinking policy. For more than 3 decades, from my service in banking, from working as an associate administrator at the U.S. Department of Agriculture, to working at NCUA, and most recently, up until a few weeks ago, as the acting comptroller of the currency, and now as a board member of Atlanta's Federal Home Loan Bank, I, ladies and gentlemen, have seen firsthand how sound policy and prudent regulation can expand opportunity when grounded in partnership. I've spent the better part now of 3 decades working diligently to ensure that every family, regardless of zip code or income, has access to safe and affordable housing, so they have a place to call home. But lamentably, we all in this room know the statistics. America faces a severe housing shortage of nearly 4 million units. But behind every number are families, veterans, teachers, and small business owners, all striving to find stability. Yet with the right policies, affordable housing can be both sound investment and a social good. As I look around the room today, I recognize that the institutions represented here today, many of them NAAHL members, are turning capital into community outcomes. Here in Washington, in an era where bipartisanship can indeed be rare, housing is increasingly an area of common good. On October the 9th, the U.S. Senate passed the National Defense Authorization Act, and within that bill were two major bipartisan housing and community development measures that NAAHL helped shape: the Road to Housing Act and a bipartisan package of CDFI legislation, all aimed at expanding housing supply and strengthening community finance. These provisions include the Community Investment and Prosperity Act, which would raise the public welfare investment PWI cap, enabling banks like many of you in the room today to increase investments in low-income housing tax credits and new market tax credits as well. Ladies and gentlemen, it was NAAHL's research that found that 42% of LIHTC investments come from banks near their PWI limits. Lifting the cap would certainly release billions of dollars more for housing, turning analysis into action. Our financial system's resilience depends not only on strong institutions, but also, you all, on collaboration among financial regulators, of which I've had an opportunity to serve with several of them. At the Office of the Comptroller of Currency, we ensure banks can engage in affordable housing and community development with clarity and with confidence, balancing safety and soundness with innovation. At the National Credit Union Administration, where I served as chair, we modernized the risk-based capital framework and strengthened liquidity access through the Central Liquidity Facility and enhanced collaboration with the Federal Home Loan Bank system. I also served as a board member at the FDIC, and I'm proud of the fact that the FDIC has enhanced coordination around CRA examinations, and it has created now a more consistent supervisory approach as it looks at CRA. And at the Federal Reserve, leadership has time and time again emphasized the relationship between housing affordability and financial stability through extensive research and community development programs. The Federal Reserve Banks of Atlanta, Dallas, and San Francisco have all highlighted the housing supply gap's effect on local economies, while Chair Jay Powell has reinforced the Fed's focus on stability through inclusion. Taken together, these initiatives demonstrate a shared regulatory philosophy, and it's something, you all, that I've said for the better part of my years working in financial regulation. Regulation needs to be effective and not excessive. And I think that some of the measures that you're seeing coming out of the financial regulators today certainly do enforce that and enhance that. And I think one of the things that we can say is that regulation that you're seeing coming out of Washington today is also fostering greater innovation, more so than what we've seen. All of these together reinforce a vision of supervision that safeguards the financial system while enabling it to meet real-world needs of the local communities that all of us in this room care about and that we serve. NAAHL's strength lies in its ability to combine policy expertise with practical evidence. You just don't make the case for affordable housing. You bring data, partnerships, and proof points that move policy forward. Your engagement with a lot of my dear friends who are here in elected offices. I love your engagement with Senate Banking Committee Chair Tim Scott, or the work you're doing with French Hill from House Financial Services and his chairmanship, or with Treasury Secretary Scott Bessent, who appointed me to the recent role that I enjoyed. The work that you're doing with all of these legislators and policymakers, it ensures you all that decisions are informed by insight and not ideology. As you all now prepare for today's important discussions, I want to leave you with a sense of optimism and a clarion call to action. We have before us an extraordinary opportunity to reshape the nation's housing landscape with policies that are pragmatic, inclusive, and sustainable. But opportunities alone do not move markets, or for that matter, change lives. Leadership does. And each of you here today, as affordable housing lenders, investors, and community partners, are the catalysts of that change. So, as you prepare to leave here later today, as you return to your institutions after this summit, I urge you to focus on 3 imperatives. First and foremost, strengthen public-private partnerships. Engage directly with federal and state housing agencies, the Federal Home Loan Bank System, and local governments to translate federal priorities into tangible community outcomes. The next wave of affordable housing success will come from collaboration and not isolation. When lenders and regulators work in concert, not at odds, we build the kind of trust that accelerates progress. Secondly, advance evidence-based lending and policy innovation. Use data and outcomes to show how responsible lending strengthens financial stability, improves credit access, and enhances economic mobility. As I saw at the NCUA, OCC, and FDIC, credible data from institutions like NAAHL, it informs policy and supervisory guidance. Data, not ideology, is what ultimately drives bipartisan consensus. Third and finally, lead the national conversation on inclusion. Keep financial inclusion at the center of your mission. Affordable housing is more than simply an asset class. It is the foundation of dignity and opportunity. The lenders represented here today have the power, and yes, I call it power. You all have the power to bridge racial, geographic, and generational divides through sustainable access to credit and homeownership. Housing policy is not just economic policy. It is human policy. It touches the lives of veterans, teachers, and small business owners, and working families who represent the heart of our nation's progress and promise. As I often remind a lot of my colleagues and friends here in Washington, when we invest in housing, we invest in hope. And hope is the cornerstone of every thriving community. So let us leave this confidence not only inspired, but committed to strengthening partnerships, advancing evidence-based solutions, and ensuring that our nation's prosperity is built on the foundation that every family can afford to call home. Thank you all for your leadership, your service, and all that you're doing to make the American dream of affordable, dignified housing a reality for all. And now I'd like to invite my dear friend, Nikki Halsoper from J.P. Morgan to come and conduct a fireside chat. Thank you all for having me. What a treat to see you. It's been too many years.
So at JP Morgan, a big deal about speaking is you get to have walk-up music. We didn't get to pick, but I picked us a song.
Oh, good. What is it?
Eric Church, Carolina.
Oh, yes, my home state. I flew in from there last night.
So we both have a Carolina tie, and we have been friends for a very long time.
We have.
And this is the easiest job because you're so charismatic, and you have such a wonderful history where you have seen from multiple angles. And I thought we'd just start by talking about your career.
Oh, gosh.
And really what got you into community development, how you stumbled into this work, but would love to just hear more about you and how you got here.
You know, that's a really interesting question. A lot to unpack there, and I don't want to bore you all. Grew up, as Nikki just referenced, I grew up in North Carolina. I grew up in Charlotte, North Carolina, went to high school there, went to college in Chapel Hill, but I was a little nerd in high school. Not only did I participate on the debate team, tennis team, but Nikki, I also had an internship at Arthur Andersen. So you all imagine your junior and senior year in high school, all through in college, going to Arthur Andersen thinking that you were going to go into the accounting profession. So that's what really gave me an eye and appetite for business. But what many of you don't know, and Nikki, I don't even know if you know this, I had a short diversion conversion on my way to going into banking and finance and community development. I was a missionary in Africa. I spent a short time in Zambia thinking I was going to be destined to become an Episcopal priest, thinking that I was going to be able to save lives and transform communities. But if you all watch these movies from time to time, in the movies, the guy that's on that road to becoming a priest, you're normally jostled out of bed by a thunderbolt of lightning and all that. Well, that didn't happen, so I assumed that God didn't want me. So I went into, as one does when God doesn't want you to be a priest, you become a banker. And, and so doing that, you all, and I say that a little tongue-in-cheek, so I later talked to my priest who said that is only in the movies when that thunderbolt does occur, but he also said something that I think you all will find, and I'm sorry that I can't see all of you on that side. That could be a blessing. I don't know, maybe you can't. But he said something really interesting. He goes, Rodney, you don't have to wear the clerical collar to touch lives and transform communities. So if you think about the work that I've been blessed to do in working at companies such as where Nikki is now and a few other banks and being a regulator, I have always carried that mission or my ecclesiastical underpinning of serving the least amongst us, really recognizing that I don't really have to preach a sermon, though, to support affordable housing, to support economic renewal, helping really bridge the gap among those people that have often been underserved and underbanked. And those would be the disabled communities, Native American communities, folks that really have been on the fringes of a lot of the things that we all care about. So that's what's given me all this laser-like zeal for nearly 3 decades of work in this space. This work that we all do every day is not at all for the faint of heart, but I think that because of that ecclesiastical underpinning that I have, Nikki, that is what allowed me to really love this work. I look at it as a chance to touch and transform lives, and I don't have to wear a collar every day to really touch and transform communities. So that's a little bit about what drives me and the passion that I have.
So I actually did know this about you. I was the daughter of an Episcopalian priest.
Oh my goodness.
I was born at Virginia Theological Seminary, and
Not that far from here.
Yes, I also became a nerd, so maybe there's a theme there. I was a mathlete, not in the debate club, and I thought that was really cool. I think someone had to say it is not cool to go to math contests, but
Being an Arthur Anderson intern when you were 16.
I actually wanted to work. I did not want to speak in public. I thought that sounded horrible. I wanted to be a scientist in a lab.
Goodness.
And then stumbled into banking.
What a great story.
Yeah, so it's we have a lot in common. It is, but it's always good, I think, to hear your background. And one thing I think is so unique about you is you have played so many different parts, so you see all the angles. And in your opening comments, you talked about working in concert. And we talk often at NAAHL about the art of the possible.
Exactly.
And how that can happen and how the magic can happen through that. And your lens that you see the world, I think, is really inspiring. So let's shift and talk about something that we're all talking about, which is affordable housing. It's the issue that brings us all together in this room. We know that housing supply has become one of the top issues across the country. What are some of the tools that you have seen that have been successful in your career? Some of the programs and the partnerships? Would love to just get some inside baseball as to some things you've seen work. I know we're all trying to solve really hard problems.
We really are, and I need to remind any of you all, what I mentioned over there from the podium, nearly 4 million housing units that we really need to really provide affordable housing. And some of the things that keep me up at night, first of all, is how do we really meet those needs? I think we need to continue to have access to the low-income housing tax credit program. LIHTC is really what's been a key driver of promoting affordable housing, and especially the fact that over 3.6 million units of affordable housing have come from LIHTC. And also the fact that nearly 8 million jobs have been created and sustained through LIHTC. So let's definitely continue to push and see that we can expand that program. I think another success point that I've seen you all is through the work that I've done with the Federal Home Loan Bank. Show of hands, are many of you involved with the Federal Home Loan Bank here as lenders? Great, great, great. I love that because you all, the work that they're doing through affordable housing, they're not just strengthening your bank's access to liquidity sources, but they are using a lot of their annual profits to re-stimulate and reinvest in the local communities. So I love the fact that the Federal Home Loan Banks have been a really key partner. I think another opportunity that I see by way of partnerships is collaboration with NeighborWorks. I know that, Sarah, you mentioned that I was on its board and I chaired it. It's partnerships. It's the whole important role that they play. So Federal Home Loan Bank, I think, is important. NeighborWorks is important, but also continuing to pursue the new market tax credits and LIHTCs. I think that's what I'm seeing, and I'm not seeing any of our regulators here look at any of those opportunities as things that your banks shouldn't be doing. They, in fact, applaud those opportunities, and I was proud of the fact that when I was at OCC, and even when I was a credit union regulator, even though the credit unions don't engage in CRA, I still propelled the road for them to pursue a lot of these types of activities. So they are still looking at the lending test, the service test, and the investment piece. So those are some of the main things, and it goes back to what you all preach here, collaboration.
Mm-hmm. Well, we know that Community Reinvestment Act has put a lot of money in a lot of communities, and everyone doesn't agree on how it could work, but it certainly has done a lot over the last 50 years.
It certainly has done a lot. It's continuing to do a lot. And Nikki, thank you for raising that. I don't know if you all are telling the story, but when we think about just the past decade alone, CRA has contributed to about $2 trillion with a T in community development and investment lending opportunities over just the past decade alone. And I think that's critically important. And I am an erstwhile CRA officer. That was one of the first jobs. So when Nikki asked the question, so we get me from leaving the missionary field to going into banking, I probably didn't talk about some of the banking things. So I've been a commercial banker. I became a community lender when I was with a tiny community bank there in Charlotte, North Carolina. I then went on to work with another bank where I was its director of affordable lending. And then Nikki and I got to be colleagues at JP Morgan. So a lot of my life has all touched either directly or tangentially CRA. So I'm a huge proponent of it. I think that its intended purpose is still just that today. It's lamentable that we still need to have that level of laser-like focus because the communities are still not keeping up. So yes, there is a lot of demand now and attention in Washington that are looking at tweaking CRA. I'm not hearing anyone mention it going away, you all, but it's more about tweaking it. And I'm for some of it being tweaked because I do think that for a lot of the companies that we see here today, your digital footprints, are we looking at CRA today through a digital lens? Are we able to look at how some of these new entrants and fintech providers are able to comply with this? So I do think it's maybe an opportunity for it to be recalibrated, but not go away because the needs are far too vast. And I think I'm going to go on a limb and say something that I've never said in public before, and that is, as I think about CRA and its need to be more modernized, I think, Nikki, we should perhaps look at CRA having a rural component. I think that we're seeing a lot of pernicious undercurrents in rural communities as many institutions just can't really operate there. So how do we ensure that they're not going to be the predatory payday lenders going in to fill those voids? So how do we find opportunities to have an agricultural or rural lending component as we look at CRA? And I don't know if that's contentious. I'd love to be a fly on the wall when you all talk about this later, but I think that's one of the things as we look at modernizing CRA but not eliminating it.
Let's talk about rural. You have some history in rural too.
Yes.
We've been talking about it a lot, and how do you take overlooked communities? We talked about the Carolinas. There's
Exactly.
a lot of communities in the Carolinas. But why don't you talk a little bit about your history and purview? And I think that would be very interesting. People may not know that about you.
Exactly. Gosh, I feel like this is a revealed all thing.
I know. I'm like Barbara Walters.
You
up
are.
Here. If you cry, then I have been.
I was just thinking about that. Do I need to have Kleenex as you're doing these deep dive questions? Well, my first political appointment, so imagine again, I'd been in banking, I'd been CRA and all that, and I was in the Bush administration, that's George W. Bush, and they asked me, knowing about my zest and love of affordable housing, would I be the associate administrator of rural housing at USDA Rural Development? Show of hands, are any of you here in the room using USDA Rural Development? Good. I'm happy to
Place
say.
someone right here just for you.
Just that, I mean, you've been a part of all those things. And you all, the USDA, we never think about the housing work that they're doing, but they are one of the largest lenders to affordable housing in the United States. And I think the thing that I would like to propose that we look at is how do we address those 85% of poverty communities in rural America? And you heard that correctly, you all. 85% of most of rural America is considered low to moderate income, and that's been persistent poverty. And 17% of the households in rural America are using over half of their income for housing. I think that's something that really needs to be addressed. And USDA Rural Development, they have the housing arm. They also, you all, have a small business arm as well. And then they also have an arm called community facilities. So these are all lending programs. But what happens, if your banks are all lending in rural communities, you can get the USDA guarantee, whether for the small business loan, the housing loan, or the community facility. And community facility, look at that as a rec center, a community shelter, things of that nature. But the point is, it is a viable, ongoing entity that I think is often overlooked. And I, as a regulator, I certainly care about safety and soundness. Well, you all, your banks love safety and soundness because you are having a lot of that loan that you're originating, it's going to be insured by the U.S. Department of Agriculture. So that's one of the things that I certainly like about USDA Rural Development. And some of the things that I think would be most applicable to all of you would be probably the Direct 502 loan program, and also they have the Section 515 housing program as well. But I think anyway, the net message though, I think, is that we just need to look at how do we marry some of those programs with CDFI funding, and how do we use private capital for public good. But USDA, again, I throw that out there. I don't know if any of you are hearing about rural development, but anyway, I think it's something well worth investigating.
Well, even taking it, I talked about Eric Church and Carolina. What people might not know is that our states were devastated by a hurricane, and they did a fundraiser, and Eric Church was one of the singers, and he sang the song Carolina.
Exactly.
So
Amazing.
if you want me to make you cry, this is my...
I know.
But it is...
And I was there in North Carolina, you all. I was giving a speech at a small business conference 24 hours before the whole storm, and it's hard to believe that the hotel where I gave the speech was literally all but destroyed, literally almost a day and a half later, right there in Asheville.
We saw houses float away.
Floating, exactly.
And it was really devastating. But these communities, and they're starting to rebuild. They're starting
rebuilding.
to open.
They're resilient, and again, it's all through collaboration and public-private partnerships.
Yep. But it has been, and I know that's happening all across the country, but when you see it in your backyard, it's...
I know.
It's
It's heart-wrenching.
Really devastating.
Who here is from North Carolina? Do we have any folks that... I see a few. Great,
How
great.
about South Carolina? Yeah, just me.
Well, no, we're good. Well, no, well, we...
There we go. Oh, yes, hello.
Okay, great.
See, it is God's country.
It really is.
It is. Let's shift gears to CDFIs.
Mm-hmm.
And lots of us have great partnerships or work for CDFIs. Do you have thoughts on innovative ideas, good ways that we can do it? What's your thinking there?
First of all, I'm a huge fan of CDFIs. I've been probably since I was made aware of them some 30 years ago. And again, from having worked at the OCC, I was able to work a lot in concert with some of the folks at Treasury. So I look at CDFIs as the connective tissue between traditional finance and the communities that are underserved that we all wish to serve. And having the perks that I've had of being able to oversee both banks and credit unions, and y'all, it does make me a little bit of a unicorn. I don't think we've ever had someone that went from overseeing two of the different industries, but what that does for me is it lets me see, to your point, a unique vantage point. So you all, we have 1,000 CDFIs, that's both banks and credit unions, that carry that designation. And you all, that's roughly representing about $300 billion in assets. And they have proven time and time again that mission and margin can coexist. We can sort of have what we were calling once upon a time the double bottom line. They have proven that you can do great things in your community and still able to do so without a loss to your companies. And again, I like the fact that CDFIs are delivering over $30 billion, that's with a B, in community loans annually. And you all, the default rates are lower than some of the things that we would see from what we would probably call traditional A paper. So don't let anyone ever tell you that the work you're doing is creating or providing injurious to the safety and soundness of our system. From the data and from the work that I've done, the work that we often see going to our communities that have been underserved and marginalized, the loans that CDFIs are making do not have any higher rates of default or delinquency than any of the others. And now you have me on the roll. I also take umbrage when we think about the great financial crisis. I was vice chair of NCUA then, and I think that we had a number of folks who around the globe were all saying that particular crisis was exacerbated by CDFI, Community Development Affordable Housing Loans, and you all, that was
CRA. Yep.
That was not the case at all. So I want to stand before you as someone who has seen it as a regulator and as a banker. The work that you do it matters, it's impactful, and don't let anyone ever say that it is not serving the communities. Don't let anyone say that it is proving injurious to the safety and soundness of our system. It's not doing that at all. If anything, it strengthens it because we're helping provide access to capital and doing so in a sustainable manner.
Yeah. I feel like I have the easiest job right now in the whole world. I just say something, let's go. This is such an honor. I would like to end with a question about something that you have said. You have called financial inclusion the civil rights issue of our time. As you think about opportunities to support financial inclusion in this moment, what makes you excited?
That's a really good question. Well, you've already heard me talk about the ecclesiastical underpinnings as to why I care about this mission and why there are days when it's more difficult than others, but I soldier on. The reason that I have always and will continue to say, Nikki and group, that financial inclusion is the civil rights issue of our time, I don't say it as a platitude. I say it because it's quite that. We have 40% of our American households who are unable to obtain a $400 loan in the midst of an emergency. We have 72 million households for what we would call credit invisible. There is no mechanism by which that we can score them. And what does that mean? Why do I care about this so passionately? Well, without a credit score, you all, it determines where you live. You can't get a rental home. You certainly can't buy a mortgage or get a mortgage without a credit score. Where one lives determines where he or she gets to educate their children and the family. So that's why I look at financial inclusion as a civil rights issue, because of one, the fact that we want you to be able to have a place to live. Secondly, without a credit score or without full-on financial inclusion, you do not even get to get a car loan, especially one that's affordable. Well, how is one going to go to and from work if you're not in the mainstream economy? And then another piece about the credit score, you all, many of us, the companies that are all in the room today, you have to have a credit score to work. You have to have a credit score to work in banking, finance. I had to have one to be a government official. So with that being said, those are all of the things, you all, that without credit score, without full-on financial inclusion, that you're denied. Or even the small business dream, the entrepreneur who wants to bring that idea to fruition. So that is why, Nikki, I have called financial inclusion the civil rights issue of our time. But I'm glad to know, you all, that there are folks who are trying to meet the needs. There are the fintechs out there that many of you are working with in partnership that are being able to really open the credit aperture so your banks can all find ways of getting opportunities to the credit invisible, the looking perhaps at cash flow lending. Another thing that gives me great hope is that the banking regulators, they have all spurred financial inclusion through my old agency, the OCC, REACH, and in fact, your company, Project REACH, the Roundtable for Economic Access and Change, designed to bring banks and nonprofits together to catalyze change. We created a similar initiative when I was at the NCUA. It was called Access, Advancing Communities Through Credit, Education, Stability, and Support. You all, the financial regulators are doing that. The FDIC has long had its economic inclusion group. The Federal Reserve is also looking at these issues. So what gives me great solace and great comfort is that the regulators are not turning a blind eye to it, but they are investing and marshaling resources around things that really will provide greater financial inclusion. You all, as you're looking for opportunities, please make sure that you're telling the story about how it gives your banks access to new revenue, access to new customers who perhaps will go from being able to get that small dollar loan to a credit card to a mortgage. So let them know that financial inclusion is not charity, it's a strategy for sustainable growth. And Nikki, I'm going to take a little liberty and say something else, how I've evolved over the few years that I think about financial inclusion. I think, you all, that for a while in my career and even early on as a financial regulator, I thought it was my duty just to think about financial inclusion. I just want to get you in the door of the bank or credit union. We're going to get you a small dollar loan. You're going to have a checking account and savings account. We're going to call it a day. You all, I think that may have been a little narrow-sighted on my part. So what I'm saying now is I'm looking at financial inclusion far more holistically than I've ever looked at it in my past. I'm looking at now, yes, we still want you to get the small dollar loan. We want you to get the credit card. We want you to get the mortgage. But you all, are we thinking about retirement and 401ks? Are we thinking about equity? Are we thinking about all the other things that we all together have as folks in the mainstream economy? So that is what I'm doing now. I still am blessed from having overseen the banking agencies and worked in the industry. I still have a wonderful bully pulpit to talk about these issues. So I'm now meeting with a number of Wall Street firms and other folks around how do we bring Wall Street into the financial inclusion segment around teaching financial literacy about stocks and bonds and 401ks. So that's how I'm looking at financial inclusion. Another piece is, I don't know if this is going to come into your dialogue today, but I was advising a lot around stable coins and digital assets. I think that's another piece that we're going to see a lot of, especially with Genius Act and Clarity Act, I think passing perhaps soon. You all, those tools are great. Stable coins, I think they're wonderful. It's going to be a wonderful way for people getting their payments in real time. But guess what? I said this in a Treasury meeting. Do you all know about FLEC? It's the Financial Literacy Education Commission within Treasury. Many of you may have been at that meeting when I said this. While I support a lot of the digital transformation, I don't want these tools to be introduced and then creating more gaps between the underserved community. So are we building digital education plans? Financial literacy, is it going to now encompass digital? Because I sometimes think the problems that we're trying to solve, they could continue to exacerbate some of the issues plaguing our underserved and marginalized communities. So sorry, I just went on a rant, but I just want to make sure that, I just want you to know, I'm looking at holistically now approaches to financial inclusion, going far beyond getting you in the door for a checking account.
Well, I want to personally thank you. We are friends.
Yes,
I'm
we are.
so proud of you. May I say that?
No, but you're making me blush. No one wants to see that this early in the morning.
It is such a pleasure, and I know you have been incredibly motivating for this audience. So please join me in thanking Rodney.
Thank you. Thank you.